Jackson Tolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this around noontime on Friday, August 15th. So once again, it was okay for the market this week. The major indexes, as I record this, are generally up, especially small caps. We did see kind of a rotation out of a lot of growth stuff this week. Most of the leaders I follow or own were down this week. But you had some small caps and, home builders and financials and things like that perk up. Although later in the week there was kind of a re-rotation, so we'll see what happens. When I kind of step back, I've two thoughts. Number one is, three, I guess. Number one, obviously the big picture remains very bullish. But number two is most of the intermediate term evidence is still positive, right? The trends are still up for the major indexes. The broader indexes got a bounce this week, so that helps. The number of new lows has shrunk. Most stocks are in uptrends, above their 50-day lines. And even among things that have wobbled, don't get me wrong, we've lost some leadership over the past couple of months, really since the start of July. But in the last 2, 3, 4 weeks when things have wobbled, for the most part, most things have wobbled after big runs. So it's not like we're seeing a ton of huge breakdowns. We are seeing one today in Roblox, but we're not seeing a ton of, just everything's wiping through its 50-day lines. At the same time, it just seems to me like in the last 3, 4 weeks, there's been a lot of movement, up, down, rotation, this, earnings over here, news item, tariffs, chips, different sectors. All these things are going on. But when you step back, except for kind of really the big cap indexes, there's not a lot of progress being made, okay? And I'm not saying, that means we're going lower, but after a big run, when things kind of start to chop around and not make a lot of progress, it's telling you the supply-demand thing in real time is becoming more balanced. So I'm still comfortable, especially from a growth perspective, having a chunk of cash on the sideline and just being patient, and we'll see what happens. This is all descriptive, not predictive. Maybe we come in next week or two, or maybe everything kind of pulls back into Labor Day, and then we come out and a bunch of things, take off their 50-day moving averages, and it's a bunch of low-risk entry points. Like that could happen. But you kind of need to see it first, right? Right now, I just think, especially on the growth side, holding some cash, being selective with new buying, and just seeing how this plays out. There's just not a lot of money being made, at least consistently. Things that go up for a week or two then tend to pull back for a week or two. So unless you're a short-term trader, we tend to stay relatively close to shore. In Cabot Growth Investors model portfolio, we're about 42, 43% in cash. I do think that's too much. I wouldn't mind. We actually have 2 or 3 stocks that are looking good that I wouldn't mind averaging up in. We have sort of smaller positions. So I could whittle away at that if, the market and growth stocks find support here during this rotational phase. But overall, I'm not anxious to put it all to work here just because there's not a lot of great entry points out there among the stocks that I look at. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. Starting as always with the NASDAQ. It looks great. Hit a new high this week. Barely pulling back as I record this. We're down, 1/3% or something. So it all looks good. Our largest position in Growth Investor, this is not our normal thing, but it happens to be a leveraged long index fund, not on the NASDAQ, but on a different index. But you're going to see the trends remain strongly up for the big cap indexes. A little bit of resistance here, but clear higher high this week. And then we did see some pop here in the small caps. Now this is the S&P Small Cap 600. It has backed off since then. There was a good inflation report, then there's a bad inflation report. That's the problem with trading on these economic numbers. So it started to reverse a little bit, but so far net, you can see it had a good couple of days. It's come back, but still, pretty good week overall. Mid caps, not quite as strong, but you can see they kind of lifted off the 50-day line. New York Composite, just running through the indexes. So we do have a little bit more daylight on those broader indexes. We've been talking about the equal weight S&P 500, same sort of thing, how it bounced, come back down a little bit, but, decent bounce. The equal weight NASDAQ 100, not quite as good of a bounce, still hanging around the 50-day line. So a little bit more of a more daylight on a lot of these indexes. But either way, the intermediate term trend is still certainly up for most things. There's some, you can pick and find some things, okay? Let me get to my notes here. And the other thing too that I would note, and I probably should have been noting this in recent weeks, but some of the growth, I wouldn't call these like the be-all end-all of growth measures, but this is the IPO fund. Obviously, it's concentrated in IPOs where like 1 or 2 names can make a difference. But it's certainly had a nice run. It's clearly a risk-on type measure. So you are seeing some of that. Even the FFTY, which is They own some, I would say some of the stocks they own are kind of thinner or a little bit more wild than I would go into. But either way, you can see it's still in a nice uptrend above the 25-day line. So there are some signs that some areas of growth, I would say some more speculative things, IPOs and some of these things are still doing well, which is a plus. But a lot of the stuff is still just kind of marking time, found some support this week, but kind of we'll see how it goes, all right? The other thing I just want to mention a couple of sectors here. This is XLP. We always mention this. It had ramped. Now it's kind of pulling back in here. So nothing doing. I would say, here's the kind of initial, we call this a first thrust, right? So now if all of a sudden we're up here in a week or two and the market is sagging, now you might start to see another piece of evidence that like, hey, maybe the institutions are pulling in. It's good to play these scenarios out, but at this point, that's not happening, right? Right now, it's just, at best, it's at the top of a trading range sort of thing, and certainly not outperforming the market. XLF, I wanted to mention, just some of these broader, indexes kind of picked up here. The home builders, ITB, you can see picked up here above the 200-day line and stretched higher. The overall chart's not perfect. It's not, going to make you rich per se. But, it's been a big bottoming area, and there's hopes for the Fed cutting rates, so on and so forth. So we'll see how it goes, whether that sort of rotation continues. And rotation can be good. What I always say is if rotation comes at the expense of the leaders, meaning the leaders like really break down, not just wobble, but break down, that's not good. We saw that last summer, big rotation, looked like small caps were getting going, and then the whole market fell like 10 or 15%. But a lot of times what can happen is these things will wobble, and the rotation gets some of these home builders and financials getting going, but then the growth kind of, the leaders hold firm and then extend higher afterwards. So you just have to be patient. You can't take it day to day, and let's see how things play out. Moving into individual stocks, first I just wanted to mention, I have talked about we've seen a lot of positive earnings reactions, and we have. I would say there haven't been many positive earnings reactions and then they run. There's been a couple, but usually what we've seen is they gap and then they kind of consolidate, and some of them have kind of fallen pretty sharply. I wouldn't say that's the norm, but just it's not like you're getting some good news, it pops for a day, then it kind of sits there. So this is Roblox. It's not a decisive breakdown today, but clearly looks a little bit abnormal. We'll see. Maybe this is the 50-day test and it holds, but kind of a big run. You had the big gap up, big reversal, and then it's been kind of, it looks toppy to me anyway. We'll see. Intermediate term toppy doesn't mean the stock's had a huge run. It certainly has the right to rest for a while if it wants to and still be okay longer term. But right now it's got a little bit of, there's some news today on lawsuits or whatever. AXON Enterprises, which is, like the old taser, just kind of this sort of action, it had consolidated here. Okay, normally it was lagging, but then it gapped up nicely on earnings and you're saying, oh, maybe that was just a shakeout phase and it gets going. But then, boom, 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 it just kind of sells off from there. Dutch Brothers, which is still on my watch list. I wouldn't say this is broken, but this is your, one of the better cookie cutter stories out there. Clearly not a gap to new highs or anything, but it kind of came up right toward this resistance area, and then it's just kind of backing right down. Now, again, you come back up next week or two and it's back up here. I'll be very interested in it, but you're still getting the selling on strength is my point. Wingstop was another one, which doesn't look too bad, by the way. Again, I wouldn't say I've completely taken these off my watch list, things I'm keeping an eye on. But just, it gaps up, it looks great, it tests resistance, and then it falls, whatever that was, 10 or 15 or 20% in a few days. So you're still seeing a lot of that action out there, even among liquid, fundamentally sound stories that, gap up on earnings. So we'll see how that plays out. Is that a major top and these things die? Is it just sort of a shakeout and allows these things to build out their launching pads further? Time will tell. But just an FYI. Okay, in terms of individual names, Cloudflare, this is NET. It's been a leader. It's been one of these names that kind of fell, 50%, and then just came right back. It changed character here on earnings. I don't know if you can see the, volume cluster here, and really just never pulled back until you started to get a couple of days in here. It's been a little bit sloppy. It hesitated on earnings a couple of weeks ago, and it's been a little bit sloppy here, but, not a lot of volume here. Testing the 50-day line for the first time, really. Bouncing a little bit as I record this. I'm just bringing it up as a name, if you want to buy it with a tight stop or not buy it at all, or you buy it higher, who knows, but it's just a name I'm looking at that looks like a pretty correct setup. Oracle, we've talked about a bunch. ORCL. Again, it's a little bit, let me go back to the daily. It's a little short term. Again, there's not a lot of progress really. A lot of these things just haven't made progress since early July. I mean, just across the board, except for there's been some rotation into like Apple and Google, but I mean, which is driving the indexes at Amazon. But you're seeing a lot of stocks with this sort of pattern. So it's a little, I don't want to say toppy, but a little, looks like there's some selling up here. But, when you look at the weekly chart, obviously, it had such a big volume move just a few weeks ago, and there's really not much selling. It's 5% off its high. So we'll see how it goes, but so far, so good as the moving averages catch up to it. NBIS, NBIS Group, same theme as Oracle. It's like they call them neo clouds or whatever, cloud hosting, whatever you want to call it. But kind of a nice, it's sloppy, but a nice consolidation here. It gapped. And I wouldn't say it's run away on the upside, but I mean, it's made a little progress in the last week, which is a good start, and as opposed to many other names I'm looking at that have gapped, okay? Reddit is an exception. Reddit is one that gapped and has gone up. I like this one a lot. We'll see how it goes. It's obviously just gone from up 100 points almost or something, pre and post gap. So, chances are it's not just going to pull back nice and easy for you and kind of consolidate gently. I hope it does. But more than likely, there'll be some sort of shakeout in here, maybe after it stretches up above round number resistance. But RDDT is probably one that should be on your watch list. And, some of these look fresher. Not that they can't go down if the market, the S&P pulls back 3 or 4%. Things are going to go down most likely. But it's not something that's been just straight up since April or whatever, since early April. Rocket Labs, this is kind of interesting. RKLB, it's been volatile. It's a little bit more speculative company, losing money, involved in the space trade. But nice base, nice breakout. Didn't last that long, very quick move. And now it's been kind of grinding lower. It had some volatility after earnings. But if you just kind of look at the weekly chart, obviously it's had a huge run. I mean, honestly, when I look at the weekly, my fear is like, does it need more of a pullback? Does it need to go down here? But so far, so good as the 50-day line's kind of catching up. So that's kind of an interesting idea. We mentioned ITB. So just some of the, like DHI. None of these things are out to new highs, the home builders. But you can just see they've been sort of just out of favor for a while, but really bottoming out. I mean, you can say they kind of hit a new low, but basically bottoming out here for 2, 3, 4 months. And they started to perk up in June. Obviously, they've caught some momentum here. My guess is what's going to happen is you're going to get, maybe they stretch, but you're going to get some pullback on Fed. Worry, will they cut, won't they cut, this economic report, that economic report. That's the nature of the group. And the question is, how does that get absorbed? Do they pull back and the thing just comes down here, or does it pull back and consolidate, touch the 25-day line and get going? So that's just something to keep an eye on. C Limited's another one. It's a recent earnings winner. Just kind of, it hasn't really been able to stretch, but it is holding the gains despite some selling in growth stocks this week. SE, this one has had a big run, but it's kind of had a little bit of a stair step thing, and this more recent consolidation looked more proper to me with some of the volume clues, obviously on earnings, but even before that. So SE is kind of interesting. It might have a new lease on life. The hard disk drives, these guys are always tricky to trade, but STX and WDC, Western Digital. Just my general theme with this, and this is not 100%, but most times if you're coming out of a major low, which April probably was, and you get this sort of action where it's, 10 weeks up in a row, 16 out of 18 or whatever, I didn't count this, but something like that, clearly out to new highs. And it's part of a theme, right? It's part of the AI theme and data center build out, which is no secret anymore. But usually that's not the top. Now, usually once you get, at some point, you're going to have a top and the stock will test you. But my guess is, these things are not going to go down here. You know what I'm saying? The first pullback to the 50-day line, it could not work, but it's a pretty good odds depending on how it happens. So I'm just keeping an eye on these. That's a long way of saying it looks good. They're holding up well. I'm keeping an eye on them for a pullback or for a continued sort of sideways consolidation here as they rest and maybe shake out a little bit, okay? A couple other things. Hinge Health, this is one of the IPOs that looks pretty good. I wouldn't say it's the more, it's borderline liquidity for me anyway. And you can see it's very, very new. It kind of had this consolidation and broke out on earnings, but it's holding up again. There's been some growth stock weakness this week and really for many weeks. but especially this week, and it's kind of holding up well. HNGE, pretty interesting story. And last but not least is gold, which I find interesting. I'm not a gold guy at all, I'm not a gold bug. This is GLD, which is just the bullion. And kind of an old, again, I'm not a gold guy, but an old sort of trading adage is like you follow the stocks, not the metal. So even though the metal is kind of sideways, when you look at like GDX, which is kind of the group ETF, you can see it really has a nice pattern here and just had a very strong thrust. You have some of these names like Newmont, NEM, really reacted well to earnings here and has stretched higher. KGC looks, this is Kinross Gold, KGC. You can see this looks very much like the GDX, the index, but almost more explosive. It's gold, it's going to move around, it's going to be, whatever comes out of Washington, and they're having these war negotiations, so who knows? It'll get jerked around on economic reports and inflation and the Fed and war and all that stuff. But there's no doubt that after a pretty solid, May, June, July consolidation, gold is off and running. So if you're more of a trader, my guess is there's some opportunities there. Back to the overall market, I don't want to keep saying the same thing, but sometimes it's the same thing that needs to be said, which is just, the big cap indexes look good. And all the other indexes are still okay. It's not like the rest are just falling through the floor or anything. But my main thing is just really since, back here or so, it depends. If you owned, 8 stocks, unless you're a trader and you're trading in and out, but if you owned 8 stocks, chances are a couple have done well, couple, topped out, got hit on earnings, and like 4 of them are just kind of plus or minus, since then. That's kind of the situation we're in right now. That can change. It can change for the worse. It could change for the better. I still think the market's next big move is up, especially if we do get a pullback. My guess is we're going to go a lot higher down the road. But right now, especially with growth stocks, I'd still be relatively close to shore and just think holding some cash and some winners and just being selective makes sense now until we see the market itself and growth stocks themselves change character on the upside with some more breadth. Okay, that's all the time I have for today. Thanks for watching. Be sure to come by again next week for another Cabot Weekly Review.